Speaking with you. Appreciate it. Mithun Aswath is now joining us, Managing Partner at Kivah Advisors. Mithun, good to have you with us today. Many believe that, the path ahead as we enter 2023 is again getting a little muddled. It's not very clear. And the big problem for equity markets is going to be that growth will come off quite sharply. I mean, actually, even in India's case, I was listening to Manish Dangi, who used to head debt at Aditya Birla, a mutual fund. He was the CIO for debt. Who said that, in FY24, growth perhaps will be 5% or less. Now, that is still a big number because the rest of the world perhaps is in negative territory. But given as it is, with valuations where they are, is it looking a little more tricky now?
Yeah, good afternoon, Prashant. I think, obviously, markets have rallied quite a bit. Despite global turbulence, and corrections can be expected, considering the Fed continues to raise interest rates and continues to remain in terms of a cautious or a hawkish stance. However, if you look a little bit further, I think the bond market, at least in the US, seems not to be discounting that there will be further rate hikes. Interestingly, the 10-year bond yield has come down over the last couple of months. It has not gone higher in the US. Even, for example, mortgage rates in the US touched close to 7% a month ago, are down to about 6.3% right now. So I think it's now the market versus the Fed. And obviously, markets are a little disconcerted by, the Fed mentioning that the terminal rate could be over 5%. And so I think the focus now will move from maybe inflation to growth. And the market is seeing this bout of correction even globally, primarily trying to discount a potential growth slowdown because of rates being high. So I think it's going to be a tussle between these two factors. Coming to India, I think, the RBI did one more rate hike. And we don't see maybe another 25 basis points. And we are through even in India. So we actually see any, declines as opportunities to get into the market, because this market's also been quite narrow. It's been mainly the large caps which have led the market. There are several, mid caps and small caps which have not participated. And we actually think if inflation starts to come down, you could see consumption also broad-based.
Okay, his line has been a bit frozen, so we'll try and reconnect with him. Okay, Mithun, you were saying that you believe inflation is near its peak, and therefore, once it starts coming down, it will drive consumption. Go ahead. Yeah,
that's what I was just trying to say, that consumption has primarily been urban-led over the last year or so. We think actually that could broad base as that part the economy also start to heal from the COVID worries which were there. We are actually seeing sectors like, hospitality, construction, all pick up. And these are, sectors which employ these type of people. And we could see some sort of improvement in that space as well.
Mithun, in hospitality, where you do see a favorable risk reward, what are the area segments that you are betting on?
Yeah, I think I've mentioned this before. We like, the tourist operators. One of the companies that we hold and positive on is Thomas Cook. That is one company that we do like. We continue to see tailwinds there. Most of the domestic businesses that they operate in, be it the Sterling Holidays business, is doing very well. We see outbound growth and inbound growth maybe actually doing well over the next couple of quarters. And FY24 could be even better with the visa issues globally also settling down.
Okay, all right. Hi, Mithun. Good afternoon. Mithun, normally when you join in, you give us a few stocks that you like as well, with disclosures that should be up for you on the screen. I believe from the FMCG pack, you like two stocks, right? Marico as well as Tata Consumer. And the IT pack, you're looking at Explio Solutions. Tell us more.
Yeah, hi, Nigel. Like I was mentioning, we do think, that broad basing of consumption could happen. And FMCG as a sector has been lackluster. A company like Marico has faced headwinds because of edible oil prices going up. We actually see most of these prices have come down now. Edible oil, wheat, as well as even palm oil prices, as well as copra prices have come down. So that could benefit Marico in the second half. They have actually taken price cuts. So you will see volume growth improve for Marico. Tata Consumer is more a longer-term play for us. We think it straddles across spaces, be it tea, beverages. They're having a large play on the water side as well, potentially with an acquisition of Bisleri. They also play the urban pockets with brands like Soul Food as well as Starbucks. So we think these two are very well placed to take advantage of any momentum in the consumption picking up.
Mithun, construction activity, right? I mean, but this is not contractors. This is cement, real estate, etc. that you like, or contractors themselves.
Not necessarily. We've not played contractors. We typically try to buy building material companies, be it cement or other providers to the supply chain. One of the companies that we do like, we've held it for quite some time, is the sanitary ware company called Sarah Sanitary Ware. So these are some ideas we like in that space.
Any stocks which you've recently exited? Because now it makes less sense given where markets are, or the valuations have become rich?
Nothing in the recent past that we have exited. I think the only stock we would have exited from portfolios over the last few months would be a company called Raymond, which we were positive on for quite some time. But the stock had rallied quite sharply, and that's why we've exited out that stock.
Okay. What else? I mean, will you be looking to do, Mithun? I mean, I spoke with Naren recently of ICICI Pru, who was telling us that you should give yourself a little more flexibility and not be all in equity. So he was kind of pushing the multi-asset fund. I mean, they run a couple of schemes in that category, which allows one to get exposure to debt, but many other things as well. Gold and maybe real estate through InvITs, etc. For an equity fund, that is of course not an option. But how would you navigate through? I mean, the idea is capital preservation largely. That was what was coming from Naren. In an equity fund, how would you reflect that?
Yeah, Prashant, actually, we do also manage clients' assets. We provide advice across assets. And obviously, with debt yields improving, we have allocated even to, say, gilt index funds for clients on their debt portion. So that's what we are doing on the fixed income side of the portfolios. And we are positive on some of these REITs as well. And we do have exposures in client portfolios. So obviously, these gilt index funds are no-brainers because you get 3-4 years of indexation, and post-tax returns are much ahead of, say, a fixed deposit.
Mithun, we'll leave this conversation today at that. Thank you very much for joining in. Have a lovely weekend. For the markets, a couple of stocks are seeing some selling pressure. So Reliance Industries has now given up all its gains. A couple of these FMCG names like Asian Paints is under pressure, Tata Consumer, Britannia on the way down. Eicher Motors too has given up all its morning gains and now is absolutely flat. We'll get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter.